Get some more analysis on all of this. Stan Shamu from IG joins us again from Melbourne. Stan, really appreciate your time this morning. Just in terms of those moves in the Aussie dollar, again, starting to get closer towards that 90 US cent mark again. What are you expecting today, given we've got the RBA meeting a little later?
Yeah, absolutely. I think this Aussie dollar is looking like it really wants to get back above that 90 level. I think it's been testing it over the past half an hour or so. It really does look like this positive risk sentiment, particularly with the momentum from China's PMI numbers, with both the official manufacturing PMI and the HSBC reading both coming in very strong, and of course both showing that the China economy is remaining resilient, even in the middle of all these reforms being proposed by the new government. I think this is very positive for Australia and very positive for the local miners as well. And just putting it into context as well, you have to look at some of the recent tough decisions that we've heard from some of our biggest miners looking to reduce costs and of course keep our company profitability at a high. So all this is quite positive for the Aussie in the short term. Of course, we've got the interest rate decision at 2:30. That'll probably carry most of the weight today for the Aussie dollar. But of course, the market's not expecting any change at all. Still expecting the RBA to remain on hold at 2.5%. So the commentary will probably carry a bit more weight. Of course, we might hear further commentary regarding the Aussie dollar strength and, of course, the future direction of rates depending on economic conditions. And I think a lot of analysts still feel that potentially November is the most likely month for a cut if we're going to get one this month. But having said that, it's a 50-50 split on the decision side of things for November, and it does look like a lot of analysts still feel the RBA will be happy to remain on hold until next year and assess how the recent rate cuts will impact the festive trading season, and whether or not we can start to see some real improvement from various metrics of the local economy, particularly from a jobs front, and of course looking at other metrics like retail sales, of which the numbers are due out today at 11:30 with a 0.4% rise expected. So if we do see a bit of traction in the short term, this might be enough reason for the RBA to remain on hold until next year. And of course this will be slightly positive for the Aussie dollar in the short term, but just looking at the levels to look out for to the upside, of course if we're back above that 90 level, then we'll be looking at resistance in the 92.50 region. But of course to the downside, that's if this 90 level proves to be resistance and caps short-term gains, then we can look at support in the 88.50 region.
So obviously, as you mentioned, that RBA important today, but there's also so much going on in terms of the global picture as well. What are going to be the key drivers for the region today, do you think?
Yeah, I think Japan, it's all about Japan today. They're likely to be the key catalyst for how the region performs, particularly in the absence of the US and, of course, other markets like Canada. With Japan, of course, the dollar yen's back above that 99 level. It just looks like it's looking to push higher into the 100 level in the short term, currently at about 99.38. So if we continue to see gains in the dollar yen, this might prove to be a very strong open for the Nikkei, which we're currently calling up 1.3% to about 13,730. And of course, that move towards 100 is likely to coincide with the Nikkei be trading into that 14,000 level. On the data side of things, we've got average earnings for Japan today expected to be up 0.8%, and if that continues to gain traction, that really just shows that Abenomics is in full swing, and potentially this will see CPI being driven higher, and of course inflation is the BOJ's key reading for that improvement in the economy. And if this comes to fruition, then of course we could see that the Nikkei continue to rally this year. We also have the BOJ out on Thursday ahead of the ECB and the BOE, so there's quite a significant amount of event risk going into the back end of the week. And of course on Friday we've got the non-farm payrolls numbers, so there's a lot to look out for on all sides of the equation from a currency perspective this week. But for today, I think Japan will be the key catalyst for the region. So
just very quickly, your call then for the ASX 200 is what, back above that 5,200 point mark at the open?
Yeah, absolutely. Back above that 5,200 mark for the first time since May. and of course we're calling it up 0.4% to 5,207 at the moment. The resistance range is quite broad. We did see the market struggle between this 5,200 and 5,250 level, which was ultimately the highs from May. So this might see a little bit of profit taking by some investors just growing a bit skeptical after the recent run the markets had. Of course, especially in the absence of the US and with this pending Syria situation, then it might warrant taking some money off the table early and seeing how things pan out heading into the business end of the week. We do expect a strong start for BHP and Rio after their shares did very well in London trade. I think BHP was up 2.3% and Rio Tinto 4.2% in London. So this should be very good for the miners opening today. And of course, other commodities did very well as well, particularly copper, which is a bellwether for economic growth. And this might lift the likes of Oz Minerals and Panos today, so they should have a good day. Of course, the retailers will be in focus as well due to this retail sales figure up out at 11:30 with that 0.4% rise expected. So look out for the likes of Harvey Norman, David Jones, Myer, and they should get a lead from this data today.
Stan, thank you so much for that.
Cheers, Brady.
Well, as we're hearing from Stan there, the official interest rate more than likely to stay on hold when the central bank meets today. 20 out of the 20 economists surveyed on Sky Business expect the RBA